Good afternoon, everyone, and thank you for joining our Sales Tax for Dummies webinar with Avalara. Presenting today, we have Elaine Coleman, who is the Strategic Alliance Manager over at Avalara. So a huge thank you to Elaine for being here today. A couple of things to go over before we get started. If you have any questions at all, please type them out in the chat or questions windows, and then we'll read those aloud at the end. Also, this will be recorded, so I will be sending that over to you in the next few days or so. So with that being said, I will hand things over to you, Elaine.
Great, thank you so much. Hi, everyone. Thanks for joining us today. Good afternoon. I'm Elaine, like Ali said, and I wanted to first start out with just again, thanking you for joining us, but I also want to give something to you today. So today's a special day. It's the 21st anniversary of my 29th birthday. And so I want to give back to you guys. So I want to make sure that we have your email address. You can certainly send it over to Allie and she can forward it to us, but I'm going to give you guys lunch today. I'm going to send all of you a $20 Grubhub card just for jumping on the call and listening what we have to say today. And just, I like to celebrate birthdays. So as a happy birthday present from me to you. So we're going to go ahead and jump in on the presentation. Basically, sales tax compliance for dummies. And it's really more of a beginner's guide to sales tax. I do want to point out, we're not calling you all dummies. It's just that sales tax is complex, okay? So we're going to walk through a few things, and let's just go through the agenda. So I'm going to cover why sales tax matters, what's taxable, what's not, cover some basic information about Nexus, what it is, why it's important to know about, look at the 5 steps for managing sales tax, and then finally, how to automate sales tax compliance and why that might be a good thing for you. So let's go ahead and jump in. Why sales tax matters? Well, let's take a look at why tax matters just in general. When you look at tax, it really comes down to money. That's why it matters. The federal government receives most of its revenue from taxes. And when you look at how that's, made up, a majority of that comes from income tax, right? We're all, used to paying in income tax. But, it's also comprised of other things. And you can see there on the bullet points, I'm not going to read them all off, but there are other things that comprise tax to the federal government. But then when you look at states, what about sales tax? Well, the beautiful thing about our country is we were founded on states' rights. And so why does sales tax matter? Well, that's where the states get their income and their revenue from. It's governed at that state level. And the issue with sales tax is that every state sets its own tax rates and laws. So you as sellers collect that tax directly from the consumers, and then you send in what is owed or what you remit to the state as a pass-through tax, essentially, is what sales tax is. And as you can see here, states rely very, very heavily on sales tax revenue. It's a huge part of their revenue. It's almost 50% of their budget. And in fact, 27 states receive a majority of their annual revenue from sales and excise tax. So it's a huge, huge focus for states to make sure that they're getting essentially their piece of the pie, right, from sales. Now, sales tax has been around for a long, long time. It was established in the 30s. Just about every state in the union has sales tax. The 5 states here that have never had sales tax, we consider them the nomad states, but you can see there it's New Hampshire, Oregon, Montana, Alaska, and Delaware. Now, the interesting thing about Alaska is while they don't charge state sales tax, they do have city and county taxes, so making it even more complex to manage if you're doing this manually on your own. So one of the complicated things about sales tax that I mentioned earlier is that, again, states get to create their own rules. It's all individual. They get to create the tax rates. They get to create what is taxable and not taxable. when the changes happen. And as you can see here, they're all across the board. I mean, there are different rates in every single state. Alaska has the lowest, primarily because they don't have that statewide sales tax. And then if you look there, little itty bitty Tennessee has the highest rate at almost 9.5%. So my question in looking at this is, if I were in your shoes, would I want to do this manually and keep track of all these different states where I'm selling into? And I'm not sure that the answer is yes there, but so that's why we're here today. Now, looking at sales tax collecting and remitting, it's a requirement. It's not an optional thing. Some of the challenges is that it is a requirement, but it's always changing as well. So it'd be nice to just know, yep, there's a rate that I charge every time, but then in a couple of years, it's going to change. And, that's a constant. Change is that ever constant. And the final thing is managing these taxes. It doesn't create revenue into your organization. It's essentially an expense to your bottom line, and it's not helping you grow your business. It's strictly making sure you're compliant with the state's laws. So I promised you we'd talk about what's taxable and what's not taxable. So let's take a minute to just kind of walk through that. So the easy one here on what's taxable and what's not, easy one that's taxable is tangible personal property. It's taxed nearly everywhere at the standard rate in the state. But there are other things such as services, software. What do you do about shipping and handling? How is that taxed in a state? And is it the same in every state? And I'm sure you all know the answer is no, it's not the same. They can be taxed quite differently. And so it depends on, ship from, ship to, which state has the laws there. And there's just so many different rules about what's taxable and what's not taxable. So when you're calculating tax, it really comes down to three things. It's where you're shipping it from and shipping it to, who you're selling to, and finally, what are you selling? And that's how the sales tax is calculated in each state. And again, different by every state, different rates in every state. And that's something that you need to decide is, do I want to manage that myself or rely on someone else to help? So let's take a look at Nexus and what that is. So Nexus is really that trigger that defines when you have to collect sales tax in a specific state between your business and the state. It's that level of connection between that jurisdiction and a business or an entity. So until the connection is established, you aren't required to collect and pay sales tax. But once that nexus has been created, that requirement is there. And on top of this, there's different types of nexus. So of course, the physical nexus is pretty obvious. If you have a company that's in a state, that gives you that liability, and it's created that relationship between your organization and that state. But then there's other things, economic, click-through, affiliate. So let's walk through what each of those are and just define them. So like I said, physical nexus is straightforward. The office, the warehouse, maybe you have an employee in the state, you've established that nexus. Economic nexus is a little bit different. So this is a newer nexus, and it's basically you've established or met a certain economic threshold, whether it's transactions or gross sales or a combination of both. You've established that economic nexus in that state. Click-through nexus is a little bit different. It's through the internet or an agent that's working on your behalf in a different jurisdiction or state. You meet that state threshold that creates that click-through nexus. The new ways of selling and interacting with customers, we're finding new forms of nexus all the time that states are coming up with. Affiliate nexus is where you have an operating company, for example, that might sell in a particular state, even if your parent company doesn't. So that would trigger a nexus for that entire entity because of that affiliate status. And then finally, marketplace facilitator laws with the marketplace nexus. So think of Amazon, Etsy, eBay, those types of organizations serve as a marketplace. And this is a type of nexus that was really created or a result of the South Dakota versus Wayfair ruling a couple of years ago. And we'll go into that a little bit more further in the presentation. But if you're, sorry about that, didn't mean to go backwards there, but if you're selling through marketplaces, there are specific laws in certain states, and not all states have marketplace facilitator laws. So again, very complex things that you have to manage depending on the type of business you're in. So the ways that your business could be creating Nexus is many. And I mean, this list is only a partial list of Nexus creating activities. There are a lot of things to consider. And just like with the state laws, it varies by jurisdiction in terms of what's happening. So for example, in California, if you go to California more than 10 times, you might trigger Nexus. But if you travel within the state of North Dakota, where I live, and you don't see a North Dakota person there, which is very easy to happen, but you stop and get gas, that could create Nexus. Every state can pick and choose those Nexus triggering events. So again, complex, craziness, but it's the way of the world, right? Now, we talked a little bit about economic nexus, and just because you don't have that physical presence in a state doesn't mean that you don't have that nexus. And so back in June of 2018, this monumental decision was made by the Supreme Court. And basically, it allowed states to tax remote selling. And at this point, every state, I would say, has taken advantage of this ruling and have enacted economic nexus laws. And we'll just show you some of this. One of the factors that makes economic nexus laws so complicated is that, again, just like the other slide that I showed you with the states, every threshold could vary. So here's the quirky thing, and you can see some of the examples here. Some have strictly a sales threshold. Some, like Connecticut, have sales and transactions. And then if you look at Georgia, some have sales thresholds or transaction numbers. And then, you know, if you sell into Kansas, one sale, it doesn't matter the dollar amount or the number of transactions, any sales create that nexus activity. So, you know, when you look at the complexities of figuring out where you have nexus, you have to be able to track your sales dollars by amount as well as individual transactions. It's a lot to keep track of if you get audited. It's a lot to keep track of to pay attention to all the different laws within the states. So something to think about there. But in addition to that, some states take a look at gross sales. And if you have, let's say 99% of your customers are exempt, but there are a few that aren't exempt, and you need to collect sales tax on those few because they count 100% of your sales in that. So you might have $100,000 in sales or $100,020, let's say, and that $20 is from that one customer that is not exempt. You still have to collect sales tax and remit that tax on that one customer, even though all the others are exempt. So another thing to think about too is it gross sales for this, and each state varies there as well. Okay, enough about that. I just want to show you here how the two maps here are showing the momentum of how states picked up the economic nexus laws. It went from a handful in January over the course of 12 months to almost every state in the union that has economic nexus laws. The two that are circled here, Missouri and Florida, are still kind of holding out. They have some legislation on the books that they're trying to get passed to enact economic nexus laws. And then our nomad states are still basically holding out with no sales tax, no economic sales tax there either. So it's everybody jumped on. States are looking at how do we balance budgets, essentially, is really what they're looking at here with how quickly economic nexus has expanded. And then as I talked about earlier, every state can create their own thresholds. And this is, again, this is an example a little bit more in depth on those that I talked about earlier, but they vary so much. Kansas has nothing. Most of the states copied the South Dakota law with $100,000 in sales or 200 or more transactions. One thing to note too is when you're looking at this, many states look at the current year or the preceding year to base their economic nexus laws on. So if you met those thresholds in 2019, an auditor could say you owe back taxes if you weren't collecting taxes in those states that you had that economic threshold on. So something to really keep an eye on. Understanding those laws with that is truly, truly important. So now let's talk about those 5 steps for managing sales tax. Some of them are pretty obvious, so we'll walk through them. But you want to know where your business is required to collect and remit tax, number 1. That's a first thing. Once you figure that out, then you want to register and collect and remit those taxes. Step 3, you'll calculate the correct sales tax amount, whether, using the resources at hand. You want to track and manage exempt sales. And then finally, it's that remittance, giving the state the money that you've collected for them. So let's go into a little bit more in depth on each of these. So building on the last section where we discussed all of the different types of nexus, you want to be aware, you want to know where your business activities are going, how much sales you're making in an individual state, new laws, changes or new laws that have been in there, and then whether or not you're going to hit that threshold. This helps make sure you're ready to collect that tax once you need to do that. And if it's something you're not sure of, Avalara can certainly help you. We can do a Nexus study and review where you're at today, where you're moving, if you're growing into certain areas, if you have ideas on where your business currently is at and in the future, we can help do a Nexus study to help determine where you must collect and remit those taxes. So then, what do you want to do in order to collect and remit those taxes? You need to be registered in those states. And so some states have you register in different ways. So you need to know, do you register with the Secretary of State? Do you get that business license? Then you get a sales tax license. You need to tell them about your entity, what you're selling. And here's some typical items that you need to have ready for registration. So do you have all this information at hand when you're ready to register? We can certainly help you with that as well. So Avalara has some services that can help you. Avalara licensing can help register in the states, help you gather all of the information, make sure that you're registering properly and according to those laws at hand. And if you realize that, I may have had some nexus or some obligations in different states, but I didn't take those right steps. I missed some of the states that I should have been registered in. We can certainly help you with that as well. Either Avalara or maybe your local state and local tax experts can reach out to those taxing authorities and make some arrangements. There can be arrangements made through a voluntary disclosure agreement or a VDA for backfiling. The states really prefer to address those businesses who weren't paying taxes upfront. They'll work with you. They want to clearly get that revenue from you. So just make sure you take care of those outstanding liabilities before you jump too far into registering and collecting taxes. So really be aware of that. So again, if there's an area that you think you may have back taxes on, be upfront, get that taken care of prior to registering in the state. Now to recap, you need to register to collect tax in a state. You need to determine where you need to register, check if you need to take additional action, and then gather the items to successfully register in those jurisdictions. And like I said earlier, our licensing services can help get those registrations taken care of for you or with you. All right, the third step, calculating the correct sales tax. You know, it sounds like it should be really easy, right? I know a lot of people say, I've got the tax tables, I've got the zip code tax tables loaded into my ERP system. Well, that might be fine, theoretically. It's actually a lot more difficult than you think. There are over 12,000 jurisdictions in the United States alone, and zip code tax rates does not get you compliant. It'll get you a rate, it'll get you close, but it won't be 100% compliant when an auditor comes knocking. And the reason being is some zip codes can have upwards of, 5 to 8 taxing jurisdictions or more within that particular zip code. So you want to make sure you get down to the jurisdictional level. The other thing is there's 1,800 different rules, taxing rules within those jurisdictions. So taxability is a huge thing. And these are examples of all of the different things within different states that are taxable or exempt. And the one that I like to point out, especially today, my sweet tooth is hitting me as I turn the big 5-0, candy bars in Indiana. I tested this out. It's also candy bars in Minnesota. But Snickers, they're taxable, whereas Kit Kat and Twix are not. I have a question for all of you. Can you think of why a Snickers is taxable and a Kit Kat or a Twix is exempt? If you're brave enough, you can add it in the chat and see if you guessed correctly. I'll give you a couple of seconds here to type in your guesses. And the person with the correct guess, I'll send you an Avalara prize. And while we're waiting, I'll just talk a little bit more about taxability, but all these different rules are complex, as you can see. Who came up with the idea of taxing straws, cups, and lids, but not taxing a cup when it's takeout? Those types of things are crazy. So I, for some reason, lost the chat box. So Allie or Jessica, I don't know if you can see, has anybody tried to answer my candy bar question?
I do not see any responses.
Okay, well, I will give you the answer because
Sorry, I was on mute.
It's okay. Nope, that's okay. No one was brave enough.
I see a few. I said,
Okay.
or I found because of ingredients like peanuts or because of state manufacturing.
Oh my gosh, those are good guesses. So the one who said peanuts is the closest. So Allie, if you want to jot down who that was, it has to do with the content of what's the ingredients in the candy bars, but the issue is not peanuts, it's the flour content in a Kit Kat and a Twix. So think about what those are. Those are more cookies, so they have more flour. They're considered a grocery item, whereas a Snickers is a candy. And so candy is taxable and groceries are not. Crazy. So whoever guessed the peanut, I'm going to say that's close enough and you're going to get a prize for me. So I'll send that out. I'll work with Allie and get that to you. But yeah, those are the crazy things that, who wants to manage all of that taxability laws. So anyway, moving on with calculating the correct amount, we recommend that you make sure you're familiar with the variables that make up those rates. Make sure you have that solution so that you have that accurate tax rate. Don't forget about the challenge of sourcing rules. So many states take into account that bill to, ship to, sold to addresses when calculating tax, determining which jurisdiction needs to be paid. And so what I recommend is working with us using AvaTax to actually use those calculations. We use address validation, and so it's the latitude, longitude, gets down to the nitty-gritty of where these people are at, and you get that correct jurisdictional tax every time, guaranteed. All right, so we've got a couple of more steps to walk through tracking and managing these exemption sales. So I talked about that earlier, about the importance of managing which are exempt, which are not, the gross sales on that. But there's so many multiple ways that businesses can be exempt. There can be exempt statuses such as nonprofit, government reseller, contractors, hospitals. There's just lots of different ways that you can be exempt. Reasons are going to vary by individual state. So you need to be aware of what you're selling to, the type of exemption reasons that are valid in the state. But you also need to manage those exemption certificates. So the important part here is having a certificate on file is great, but it's even better making sure that it isn't expired, that it's filled out properly, and that you know what the laws are within each state of expirations. Every state has a different law. Some states say certificates never expire. Others, you know, it's annually that you need to update your certificates. An expired certificate is good as not having a certificate at all. So remember that. And also note real quick, exempt is different from non-taxable products or services. So exemptions are tied to the customer, where taxability is applied to the product or service, just to be clear there. So if your business does handle exempt sales, you need to kind of look at how often, how many certificates you manage. And I talked a little bit about that, you know, valid certificates, making sure that they're reviewed, that you know if they're valid or expired. And here's something to note too. If you've changed your company name or acquired a new company, there's a possibility that you may need new certificates from all of your customers. So how easy is it for you to contact all of your customers and get that back? Is it a click of a button, or is it making a lot of calls, reviewing the certificates, making sure they're filled out properly, putting them back in your file cabinet, or however it is that you're managing them? And how easy is it to find all of the ones you have on hand as well? So Avalara has a product, cloud product, a repository called CertCapture that you can manage all of that automatically. Pretty simple to get updates. There can be, you know, emails sent to customers with a line item to click to access updating certificates, and it's pretty easy to do. So we want to make sure it's easy for you as well as easy for your customers to get this information to you. All right, we're on the last step of managing sales tax, and that's the big important, I guess, not the most important, but one of the most important is now that you've gotten everything, you've collected the right tax, those states want their money. So how do you get those funds over? How do you make sure that you're filing on time? And as the states require, some states make you file a paper return if you don't file on time. How do you know all of those rules? You need to keep up with those latest and correct forms. Like I said, filing frequency can be different from each state. Some states are monthly, quarterly, semi-annually, annually. Sometimes there's prepayments involved. So how do you back out those prepayments? Again, it's different by state, and it's just a really crazy thing to have to manage when you're working in multiple states. That can be the most complex. I typically say if there's 3 or more states, it's you know, a tough thing to manage manually. So it's something that you might want to consider automating. You also want to make sure that you have an easy way to track the changes for the filing. So monitor where you might have an obligation to file and how those requirements are changing. And so we do offer return service as well through Avalara. I recommend, consider looking at that to ease up that filing and remitting payments to states that's currently on your shoulders. So again, just to recap, here are those 5 steps along with our recommended products by step. And just, again, to make things easier and efficient for you and really allow you to focus on your business and growing the business. So how to automate sales tax compliance. Let's just take a look quick about a survey that was done about the cost of business, the cost of doing things manually or keeping things business as usual, if you will. I'm making the assumption that a lot of this is currently being done manually by all of you. But by not making any changes, look at how many hours is lost to manual workload in managing compliance. 302 hours lost annually. That's 2 months of full-time work that is focused on sales tax compliance. It's crazy. So what comprises those challenges? We ask customers what they face every day before they decided on automating. And here's the feedback. One of the biggest things is I just can't keep track of all of these tax laws and jurisdictions and the changes and everything that I need to keep up with. 78% said that is one of the key reasons why I'm looking at automating, or I did automate. The other thing was the issues with those inaccuracies on calculating. When you look at those zip code rates, whoops, I thought it was close enough until an auditor came knocking. And then you look in the middle, the 30%, there's a few. Managing those exemption certificates that we talked about earlier, that's a challenge. Are you or your sales reps or your people who work with your customers, are you familiar with what a fully completed exemption certificate looks like? Have they completed everything properly? Is that something you want to even bother your customers with during a sales cycle? So it's something to think about. And then the integrations, the continuous maintenance updates. When you're doing things on a more manual basis, you're really relying on other groups within your organization to get the information updated. Is IT busy working on something else and they don't prioritize your zip code tax rate changes that you need uploaded in order to have those proper calculations? So things to think about that other clients have already thought about when they started looking at automation. So why automate? Well, again, I like that number 5. There's 5 reasons to automate. We want to make sure that it's the most accurate that it can be. It's real-time tax calculations on real-time rates. This is going to help reduce your cost and your time focused on, those 300 and some hours that it showed on average that companies spend. Automating makes it more efficient, so you're spending less time on that. We also want to decrease your company's risk. The accurate reporting, accurate calculation, when an auditor comes knocking, you're going to have the right information on there. They're not going to find mistakes. And so the risk to the company and the money, that is going to be decreased significantly. And then looking at customer satisfaction, your customers are charged the right amounts and have a clear idea on what is owed. You can have tax on a quote and they can have a clear idea on the full price of a job or an item that they're purchasing, and it isn't a guessing game. And then finally, automating your tax compliance will free up those resources so that you can focus on building your business and taking it where you want to take it. and growing that business where you can focus on what you do best versus managing these compliance issues with the states. So we also surveyed those who have already implemented our solution and what are the top benefits that they received. Well, number one, that confidence with the accuracy is the biggest. They had the right sales and use tax, the reporting is right, and they're getting the states the money that they owe them, and it's the right amount. Improved tax compliance reporting with detailed transactions and reconciliation reports that tie back to the GL and payables is huge. That's another thing that has helped our customers. That integration that we talked about, when you have tight integration with your ERP or point of sale systems, it helps all sides of the house line up correctly. Certificate management, again, that's on there as well. So customers don't have to scan certificates. You don't have to manage them and go to the filing cabinet and dig through it to make sure you can find something. So lots of different improvements that our Avalara customers have told us once they get everything up and running and are using us. It's just great to see those benefits of automating. All right, so we know that many point of sale and ERP systems can calculate sales tax, or at least give you an idea. Many of those are using those zip code tax rates. So you're getting a false sense that I'm compliant here. So we want to make sure that you are compliant. The other thing with many of these ERP and point of sale systems that have it, they rely on manual updates. So again, I talked about that earlier about how you have to wait for your IT staff to put in those updates. Again, do you want to wait for that? Are you going to have the most real-time information? When you use an automated software like Avalara's, those challenges go away. So that's the important part, is we handle all of the updates. Everything is in the cloud, so it's real time. Rates are 100% accurate for taxability of products, of services, the jurisdictions you're selling into. That accuracy is increased, and the risks of finding issues on an audit is definitely decreased as well. So how do we do it? Let's talk about how Avalara fits into that automation picture. We have a cloud-based system, end-to-end, with tax compliance. So first, we're going to talk about the tax calculation with AvaTax. So our system integrates to your ERP, point of sale, e-com systems, and at the point that the business invoices, maybe an online checkout or a request like a quote is made, is where Avalara evaluates the transactional information and gets that taxing information to that invoice. It happens in a fraction of a second, and you get the information that you want to see or a customer wants to see as far as taxability and how much the sales tax is. Now, when you look at another step, we talked a lot about cert capture. If you use cert capture product, in that same instance, when it's making that taxability call, it's going to take a look with cert capture and say, okay, is anything on this invoice associated with an exempt customer? And it's going to make that call, take a look, should it be taxed, should it not be taxed, fully integrated. The other thing with cert capture, what that does is it manages expiration dates on those certificates. So when a certificate is about to expire, it's going to notify a customer that you have a certificate that needs to be renewed. There's a link in an email that is sent to them where they can update the certificate and send that information back to Avalara, managed in the cloud. Very little to anything that you need to do when using that to get everything up to date. And then finally, with returns, managed filing. So we take a look at the filing dates. We manage everything by state. When it's time to file, you as a customer, get a liability report based on the tax data from AvaTax. You'll take a look at all of that information and approve the filing. Then returns, files, prepares, and pays the appropriate taxing jurisdiction on time, monitoring all of the updated filing rules and forms, keeping everything up to date so you don't have to worry about that. Great system to have that automated. Now, on top of all of that, Avalara is one of 5 certified service providers through the Streamlined Sales Tax program. So what this is a group of 24 states that have come together to say we wanted to make this easier for businesses to essentially do business with us. Everything within Streamlined Sales Tax, or SST, as you probably have heard it, is to ensure that within these 24 states, there are commonalities, common filing deadlines or dates, I should say, common product taxability. So when I talked about in Indiana that the candy bars were taxed the same way as Minnesota, you can see here both Indiana and Minnesota are part of SST. So hence the reason why those candy bars were taxed the way they were. This taxing program is great. It allows qualifying businesses to get some of these services like Avalara for free. So if you'd like to determine if you are eligible for this program, we'd love to talk with you about that. So get a hold of your rep at TM Group, and they can get you connected to the proper person at Avalara to discuss this. Now, it's not just me, it's not just TM Group that's saying that Avalara is a good organization to work with, but we have over 25,000 customers working with us today to get their tax compliance automation right. Our solutions are accurate, efficient, they're integrated, and it isn't just with your ERP. I tell you what, there are over 700 integrations to just about any system where you would have a transaction that should be taxable. So our connectors span so many different products, but it does specifically include the Microsoft products that we work with our partner TM Group. But we want to make sure that, you know, if there's a place that you want this integrated to, we most likely have that pre-built integration to that product. So information is at your fingertips when working with us. And finally, I want to talk real quick about, we talked about that, the Nexus, where you have some sales tax risk or sales tax grading activities. We have an online resource that you can identify states where you potentially have some obligations based on that economic nexus. So we have a link here that you could go to. You answer a few questions. The bullet point is just a tish misleading about you only answer 3 questions. There's a little bit of information you have to have available. So you can take a peek at it. It probably takes a good maybe 10 to 15, maybe 20 minutes to fill this out. But you do receive a PDF report that just provides a map and details on where you could potentially have triggered some nexus. It certainly does not replace a deep nexus study on how you're doing business, but it does help give you an idea on where you have some liabilities. So we want to offer that to you and make sure you're aware that that tool is available online for you, and we can get that in your hands if interested. And I tell you what, I am just about done here. Actually, this is the last slide. So we promised you, in addition to buying you lunch, I want to give you something. I want to give you this ebook. So if you want to learn more about the complexities of sales and use tax, how to automate, we've teamed up with the Wiley brand to create this Sales and Use Tax Compliance for Dummies ebook. You can take a look through it when you're up at night and you can't sleep. You can read about all of your tax troubles and how you can get compliance. So we'll get you a copy of this for attending today. But I wanted to end with that, offer up some time for Q&A if there's any questions in the queue. For some reason, I lost my chat box, so I'm gonna ask my my cohorts here on the call to let me know if there's any questions out there.
Thanks, Elaine. We have a couple of questions here.
Right.
The first one being, I work for a congregation of Catholic sisters. We currently remit sales tax to Indiana for proceeds we receive from employees for their meals that are purchased from the sisters' dining room. We are considering transitioning to a model that would treat employees' meals as a donation from the sisters. Would the organization need to remit sales tax on the donation amount? Would sales tax need to be calculated based on the dollar amount of the meal donation and remitted to Indiana?
That is a really good question. And here is what I would recommend. So at Avalara, we are the software providers, so we're the developers. We actually don't offer sales tax advice. So my thing with this is I would ask that you go to your state and local tax expert to review that question. That's going to be something that if you have a CPA, I think within their state and local tax group, they should be able to get you that particular answer. I hate to push that off, but that's really more tax advice. And I really want you to get the right answer for that.
Thank you. The second one being how to address disclosure of taxable and non-taxable items on an invoice in the state of Michigan. Can you invoice amount as a lump sum with the sales tax listed separately?
Ooh, I'm not sure. I need to ask one of my smarter people on that one. I have some sales engineers that would most likely know that. So if I could get you, Allie, if you could jot that down and we can get back on the specifics on that one.
Definitely.
Yeah.
And then I have one more. Does it work for the website and GP, meaning their website is integrated with GP? Do they need it to be installed on both?
So when you say, though, is there an e-commerce system that you're working with? So here's a couple of things to think about. So I assume you have a shopping cart, yep, within the website. So it kind of depends on how you want that. If you want it integrated into GP as well, you may need to have a connector for both GP and the e-com site. So we could take a look at that. I could have you work with one of my sales reps to take a look at which shopping cart you're using, how it integrates, but most likely a lot of people want the reporting in both, and so you may need both connectors. There may be some more specifics on that, but we could sit down and take a look at how things are structured, and then my sales rep could give you the recommendation on what you would need.
They're also wondering what the cost would be.
Great question. So I can cover very high level. As far as specific dollar amounts, we'd need to take a look at your transaction volume, but everything at Avalara is based on transaction volume. And so it's a tiered approach, but it is based on your annual transaction volume. So again, is that the same person? We can take a look at that and determine what the cost would be there.
Yep, that is. So I jotted that
Perfect.
down and I'll send that over to you afterwards.
Awesome. Yep, we can help you. We can get more specifics on that.
But that was our last question. So
Great.
thank you so much, Lainey, for presenting today. And thank you everyone for joining. And yeah, like I said, I'll be sending over the recording to you within a few days. Oh, we have one more question.
Okay.
Do you address tourism tax compliance for the state of Michigan?
I believe so. You guys are good. You're getting in some really, really specific, detailed questions. I want to say I believe so. I need to follow up and make sure that with tourism, we do. But I'm just jotting that down as a note. I think so, but I'll follow up, and we can send the answers to. There might be other people that are saying, "Oh, that's a really good question." So when we send out the recording, we'll attach the answers to the questions as well.
Perfect.
Is that fair?
I think so.
I
All
love it.
right.
You guys are stumping me.
All right. Well, with that, I think that was our last and final question. So yeah, so we will address those questions in the follow-up email, and we will also have the recording of the entire webinar. So if you have any additional questions, feel free to send those over. But thank you so much, Lainey, for presenting today. And yeah, I hope everyone has a great rest of your Thursday.
Yes, thank you. Have a great day.
Thank you, everyone.